Hello everyone, I am Shivam Banka and I'll be going through this case study interview today. The purpose of this video is to give you an understanding of how a case study interview goes and what is expected of you in an interview. So this video is divided into two parts. In the first part, I'll be going through the interview and present how it's structured and my understanding of it. And in the second part, I'll be presenting the overall analysis of the interview. In this interview, you can see two types of text. The first text is the one which have blue, which is blue background, and that's the conversation of interviewer, and the text with the white background and blue text are the statements of candidate. So let's begin. Today we are doing a case study interview of auto insurance. Uh, let's see how it goes. Your client, IA, is an auto insurance company operating in India and has been facing reducing profitability in the last 2 years. They have come to you for help to identify the reasons and explore possible solutions. You can ignore reinsurance for the purpose of the analysis. Okay, so as I mentioned in my previous video, the first statement by the interviewer is the most important one, as it tells you exactly the scope of the interview where you have to focus and not go out of it. So what you have here is it's an auto insurance company in India and facing reduced profitability since past 2 years. Uh, and we have to figure out what are the possible reasons the profitability has gone down since 2 years. And one area we don't have to look into is reinsurance. Uh, can you tell me a little bit more about the industry and the position of IA, the kind of competition, the growth? Okay, so it's not very well thought question. He just is throwing out whatever questions is coming in his head. It's not very structured. But yeah, let's see how it goes. Sure, IA is one of the five, six major players who dominate the industry and hold around 95% of the market. The market has been growing steadily at around 10% per annum. Okay, so it's one of the major players. Okay, and how is the company growing is it in line with the industry? The market is growing at around 10% per annum, and the company's market share is growing in almost the same proportion. Okay. So market share is growing, but profitability is not. So let's figure out why is that happening? All right. Is this reduction in profitability only being faced by the company or by the competitors as well? We do not have any accurate data of competitors. However, reliable estimates indicate that most of them have maintained profitability levels and some have even increased profitability. What do you think are the possible cause for the same? Okay, uh, so market, some leading competition in its market has increased profitability. So that singles out us as the player who is not able to increase profitability. And let's see what could be the possible reasons for it. It can be either due to high revenues or due to lower cost. Okay, I think the interview and the candidate is now moving to the second part of the interview. The first part is usually based on some theory at this point would be the case management case study interview is divided into three parts. In the first part, you try to understand the market, the competition, and the company, and get a little bit more understanding of it. In the second part, you analyze the case by breaking down the problem into structure and figuring out where exactly the problem is coming from. And in the third part, you recommend solutions and suggestions. So we are moving on to the second part where we are breaking it down and figuring out where exactly the problem is coming from. It can be either due to higher revenue or due to lower cost. The industry is fairly competitive, and none of the players can get away with charging higher prices without losing out on the market share. Okay, so it might not be the revenue problem. As for the number of customers, there has not been any major change as such. So you can move on from revenue. Okay, so I'll move on to the cost side. There will be fixed cost and variable cost. Fixed cost is in such a company would generally include salaries, administrative expenses, etc. And the main variable cost would be the claim cost. Am I missing anything here? Okay. Not very exhaustive list of costs is given, but I think he just focused on what are the main cost which you can see at an auto industry from outside, and if it works out, it is good. But let's see how it goes. No, go on. So there's the interview didn't told him to think of all different costs at this point, and he was convinced with uh, such a small list. So the problem might be probably from such cost. Do we have any data about these costs? Any increase in particular costs? The fixed cost have been growing as per the normal trends. And what about the claims cost? IA has been seeing a rise in claims cost over the past few years, faster than revenue growth. Okay. Right. So, would it be fair to say that it might be a major reason for the decline in profitability? Yes, probably yes. Uh, okay, then I would like to understand the possible cases for rising cost and why competitors are not incurring this cost. But before I go into deeper analysis, I would like to ask, is it possible for competitors to have implemented stringent policies for claim approvals or somehow provide lesser cover using a fine print in the policies to which the costs are lower for them? I do not think that is the case. This would result in unnecessary loss of goodwill for the company. Further, the industry is highly regulated and all the players have similar policy terms and claims process. Hence, this is not practical. Okay, so there is no between the line business going on. Everybody is playing fair. All right, then I would like to take a look at the claims cost in greater detail. Before I do that, is there any other significant cost item I am missing? No, you can focus on the claims cost. Okay, so with claim cost, it is possible that the difference may be arising out of the difference in the customer's portfolio of the company compared to the competition. Okay, that may be possible reason, but how do you analyze the portfolio? You can segment customers into brackets based on age group, income bracket, geography, and terrain, traffic in the area. That would give us an idea of the risk based on the general profile of the customers. So, do we have any data regarding this? So, this is a pretty good on spot thinking of what could be the possible uh, categories we can divide the customers for the auto insurance. And this will give you an idea. This and all the points define people who are more prone or less prone to accidents. You have to think what category can divide it, and that if the candidate has done pretty good job in. Yes, so all right, there is a fair mix in all the buckets. The portfolio is generally dominated by people of relatively younger age groups, less than 25 years. In terms of income, IA has a large base of lower and middle level income groups. It has its operation in all major cities, Delhi, Bangalore, Mumbai, etc. Okay. Uh, so all more accident prone use cases for all the buckets. That explains a lot. You mentioned that the company has more number of customers who are young. They can be considered more risky as they tend to be more rash while driving, increasing the risk of accident when compared to middle-aged people having families. Further, you mentioned that they do not have too many customers in the higher income brackets. Higher income groups can be considered less risky as they use expensive cars, usually have professional chauffeurs who are generally more careful. Also, it has a lot of clients in cities with extremely high and aggressive traffic like Delhi, which have higher incidence of accidents. Does the company should either focus on improving the portfolio mix or should adjust the premiums appropriately to factor the risks? That sounds good to me. Thank you. So yeah, so I think the recommendation is also given with the suggestions and the client covered it pretty well about what could be the possible reasons for each bucket not targeting the more premium customers. And yeah, it was pretty good case. It was not very well it's structured and exhaustive, but the UE was able to carry it to find out what the problem is and where is it coming. So yeah, let's move on to the second part of this interview where I analyze the case as a whole. Okay, to increase profitability of an auto insurance provider. So yeah, also a note that it's very important to maintain a very neat and clear rough sheet and have it to such a minimal level that at one glance of it can the person can understand what exactly was your thinking process. Because sometimes at the end of the interview, the interviewer might ask for your rough sheet. Okay, so interviewee notes profitability changes can be due to both revenue and cost. Generic statement. Since revenues have been growing in line with industry, declining profitability must be due to rising cost. Problem is also specific to the client, not an industry issue. Okay, analyze variable and fixed cost of the client. Claim cost has increased at a faster rate than revenue. Understand the customer segment behind the rising claim cost. Case facts. Client is a top six Client is a top six player in the concentrated auto insurance industry in India. Client has experience falling profitability, but competitors haven't. Revenues have been growing in line with the industry. Industry is competitive with little scope to charge higher than competitors. Fixed cost growing as per market trends. Okay, so let's see how the case was structured. So profits depends on revenue and cost. We're told not to focus on revenue. In the cost side, it depends on fixed and variable. Fixed cost was the same as told by the interviewers, and the variable cost it was customer service costs and claims cost. And the problem was from claims cost as we are targeting our major customer base was higher claims customer. So that was exactly the problem was coming. Okay, let's see. In recommendations, the problem arises due to high claim cost. High claim cost arise due to unfavorable customer profile mix. Thus, the company should either focus on improving the profile mix or should adjust premiums more appropriately to factor in the risk. Observation and suggestions. Have a clear approach. In this interview, the candidate took many questions before being able to pin down the claims cost as a root cause. Nonetheless, it is clear that the candidate had a very clear framework in mind. Profitability is revenue cost, industry-wide for industry-wide or firm-wide issue, variable or fixed cost, and then claims cost. Furthermore, the candidate also asked if there were most components he was missing. This shows that the candidate tried to have a messy approach, which is what interviews are looking for. So it's a good way to keep asking if he's missing anything, but it also gives you brownie point if you can come up with more points to include in your initial statement and what could be the possible causes of such a thing. It is important to have an understanding of the nuances of the industry and of the insurance industry to come up with the cost structure. Okay. Yeah. So the interview was done pretty well, and I hope you guys have learned a lot from this interview. I'll be uploading one video every day so that you get into the mindset of understand or an understanding of how case study interview goes. If you're looking a career in consulting or having an case study interview coming up, it's a good way of going watching one video a day. And so please do subscribe to the channel so that you never miss out on any video which I update. And hope you have a nice day.